Yo, what's good? It's your boy Damien here. Welcome back to my channel where I talk about personal finance, self-improvement, just being a better person, like a sphere all around. That's what I was trying to say, but you get the point. But today we're gonna be talking about the rich and taxes, because everyone wants to tax the rich. They'd be like, tax the rich, let's eat the rich, all that good stuff. And we're gonna get into why it's a lot easier said than done, and how we basically can't really do it accurately. So yeah, listen, everyone hates taxes. No one wants to pay them, to be honest. Like, I remember when I was in high school, I would grinding, putting in the work, getting that money, and then I would think I'm getting a nice paycheck and whatnot, and then I get taxed like $100 on the paycheck, and I was like, bro, what? I worked for this. Why is so much coming off? And I thought that was the law. I was like, I guess I'm making more money now, so just naturally getting taxed more. And then jump to the past job that I just recently had, where I'd be getting paid weekly, and then the taxes that I'd be getting taken off of those paychecks is between like $100 to $200 per paycheck a week. So like, this is painful. Like, sometimes it'd be over 300. Like, I think the highest I had was like 340 or almost 400, and I was like, bro, this is not it. Like, the average tax, in general, I'd get taken off is at least like 150, around there. I was like, bro, this is not the wave. But you see, that's the difference. There's people who just accept taxes as a way of life, and then there's people who, try to avoid them in any way possible, legal or illegal. But besides the point. But we try, not we, I pay my taxes, but they try to avoid them in any way possible. Boom. Okay, so we got an illustration for you here. I will probably put it on the screen if I'm not lazy. I promise I'll try my best. But we got it from Robert Kiyosaki. I wouldn't say legendary, but he's very known in the finance space, because he wrote Rich Dad Poor Dad. Basically, any YouTuber that you watch related to finance, if they talk about any of the books that they recommend, they're gonna recommend Rich Dad Poor Dad, because it changed their view on how they see money and finances. I mean, I still haven't read it. I feel like I should, but then at the same time, I feel like I've just seen so many videos and stuff about the book that if I read it, it's just stuff that I already know, because I've seen it. So we have this illustration with the E top left, B to the right of that, and then S and I in the square, right? So E stands for employees, regular folk, people just going to your 9 to 5 or your minimum wage job, and you just working to get paid, all that good stuff, nothing wrong with it. And then underneath the E, we have small business, so your entry-level entrepreneurs. Basically, how he describes it is just self-employed people, or people who employ a small group of people. And then the top right, we have big business, 500 plus employees, the big corporate stuff, like Walmart, Amazon, all that good stuff. Then investors, we have obviously everyone could be an investor, but we're talking about big dog investors here. These type of investors are the ones that we're talking about from Shark Tank. If you ever watched our Dragon's Den, I think that's the OG video or OG show. But actually big money investors putting in $250,000, $1 million into companies, not just you buying stocks in AMC and GME. It's not the same. The point of this whole illustration is to show the general tax brackets. This is general for basically all over the world. So for general employees, we get taxed 40% on average, which is just immensely high. I don't even want to talk about it. It's high, and we just kind of have to deal with it, which is just nuts, but it's fine. It's whatever. Moving on. And then to the small businesses, this is where you actually get taxed the most, because you're still an employee, but at the same time you own a business, so you have to pay both of those taxes. So you get taxed 60%, which is, again, absurd. Taxes are evil. That's it. And then for big businesses, it's 20% tax. It's really not anything major, because tax breaks and all that good stuff that we'd love to see. And then for investors, apparently some could actually get away with paying 0% tax, but it's 0 to 10% depending on how they go about it, which is just wild. And one day, hopefully. So naturally, you can see like the most ideal spot you want to be in is an investor, but we can't all do that. But the whole point of the illustration chart is to show you that if you're an employee, you probably want to figure out a way to get to a small business, even though yes, you do end up paying like more in taxes, but then from the small business, you want to be able to move into a big business. So gradually you pay less and less in taxes. And people are going to be like, well, why do the smallest people have to pay the most in taxes? Well, simply put, the people who pay less in taxes end up providing more value to the economy than just someone who's going to their job working 9 to 5, because you're not providing anything else besides like labor and work for that said company. But then if you're talking about a bigger business or an investor, you're providing more and more value into the economy. Like if you're a big business, obviously you're employing so many people. Like just think about the amount of people that Amazon alone employs. Like that's why they get so many tax breaks, because of how much value they bring with their presence. I mean, it's still kind of tough that Amazon can pay like next to no taxes, but the amount that they bring into the economy at the same time kind of counterbalances it, you know? But you know, I mean, if you really want to avoid taxes, there definitely are things that you can do. As an employee, you can't really do much because your taxes get taken off right out of your paycheck anyway, so you just kind of got a deal. But that's why I tell people to invest or like try to create a business out of something or anything, because when you get into the small business stage, yeah, technically you're paying more taxes, but at the same time, there's loopholes that you can take advantage of. And the biggest loophole that there is, it's not even really a loophole, it's just a benefit of having your own business, and that is write-offs. Write-offs are so key in lowering your taxes, because the things that you write off get written off against your actual revenue. So say you made like $24,000 in a year, and then you wrote off $12,000 worth of things, which is kind of wild, I'm not gonna lie. And then your taxable income is only $12,000. So obviously you're gonna be paying a lot less taxes on $12,000 than you would be on $24,000. That's why I be rubbing my hands together, because with my videography business, now that it's like fully registered and all that good stuff, I can start doing write-offs myself. I mean, I'm not trying to go crazy or anything, but you know, with like new equipment, like I'm trying to get a new camera body soon this year. I think I mentioned that before. Camera body, monitors, and 1 or 2 new lenses, and then those could all be written off as business expenses. And obviously I'm still trying to make a lot more than what I'd be writing off, but you know, that's how you save on taxes. And then even with traveling, like if I were to start establishing connections elsewhere in Canada, like I'm trying to expand and like meet new people and network in cities like Toronto, because you know, we just want to be in Toronto eventually in our life. But the point is, if I go there for like a weekend or something, and then I schedule like a couple shoots, 3 or 4 shoots, it's a business expense, because you know, we're going for business. So there's a lot of other things you can write off depending on the company type. I mean, if you have like a construction company, if you buy like a brand new truck or something over a certain weight, you can write that off against your average income. That's one reason why it's harder to tax these businesses or like these wealthy people in general, because these are business expenses. Because it doesn't make any sense to pay like whatever you paid for a brand new truck for your company, and then it be like as if you never spent any money on that, and then still having to pay the amount like if you didn't spend any money on that, because like now you don't have that money, so it doesn't really make any sense. And then another way how the rich and wealthy avoid these taxes, and why we can't really tax the rich as much as we say or how much as we want to, is offshore accounts. I mean, we've all heard of them, but I don't know if people really understand how deep this really goes. I mean, we're not gonna go that deep into like how it is, because it is more complicated than just like a segment of a video, but more or less you reroute your money. Instead of going into, and say if you're American, like an American bank account, and then definitely having to pay taxes and such through there, you send it to an offshore account, say like the Cayman Islands, like countries where you don't have to pay like basically any taxes. If you're a foreign investor, you don't have to pay income tax and any of that. Like literally, you're just scot-free. and then you just set up a business there under like some shell company name, and then there you go, your money is there untaxed, and you're just living life. Because these countries usually don't cooperate with like any international powers, so you're basically safe. Like they won't give up any of your information or any of that, so there's really no way to be like, oh yeah, you have money here, let's bring that back here and let's tax it. I mean, we've seen stuff about people getting figured out of having their money offshore, but that's a rare cases compared to like how much it actually does happen. So those are like the two main ways to avoid taxes. That was like the light version, because I mean, they're pretty complicated and it goes really in depth. Like you can avoid it with like stocks, you can avoid it with Bitcoin, you can avoid it with real estate. There's levels to this stuff, okay? But we're not there yet. I mean, I don't know if we'll ever get there, because you know, we're not trying, we'll get there eventually. We might evade some taxes, but I was gonna say IRS as if I'm not Canadian. Just don't come after me, CRA, please. We're gonna do it in a legal way, the way you let us do it. But yeah, like, I mean, the more I think about taxes, it's not like I can sympathize with the rich, because I am not one yet, but like with my story at the start of the video, like paying taxes, like even more taxes on a better paying job, I was just so choked. I was distraught. Even with the lower paying job, I was like, why do I have to do this? I mean, everyone wants to keep more money in their pocket. And then imagine if you're making millions upon millions and then giving millions upon millions to the government just for them to do basically nothing with it. Because like in Winnipeg, for example, you'd think we would be giving them our taxes to be like paving roads nicely, having nice schools, our downtown actually being a proper downtown, but we have none of that. Everything is just pretty garbage, to be honest. So it pains me to have to pay taxes, and it's like a way of life, but we're gonna try to avoid them in the future, because I mean, it doesn't make sense. It really doesn't make sense to me. It's the same as like putting money into a savings account. Like, I get it, the government needs this money to run, but it's still doing a terrible job either way. Like, if I can see the progress being made with taxpayer money, I would be cool with it. But as of right now, it's not the wave. Like, paying politicians and all this stuff for them to just do nothing, or just to like play politics inside politics with their own little groups and stuff. I just rather put my money towards like growing business, or like foundations, or like literally anything else but that. But that's all for today's video. Until the next one, we're signing out.